Joining us now is Eddie Ghabour, co-founder of Key Advisors Group and author of Common Sense Bulls. Eddie, thanks so much for joining us today. Taking a look at the market action, just in response to the sell-off that we saw yesterday, a little bit of a rebound today. We had the Dow up just around 80 points. Do you think that the worst could be over when it comes to trade?
You know, I don't know. I still put about a 50-50 shot that we could still see a surprise to the downside on the market on Friday, because at the end of the day, President Trump has drawn a line in the sand. And if they don't come to some type of agreement, we're going to see those tariffs go up substantially on Friday. And if that does happen, I think you could see a substantial sell-off of at least a minimum of 3% in the broad market. So I wouldn't get too comfortable right now. Honestly, I'm shocked that the markets have held up as well as they have, considering the fact that we're just a couple of days away from that deadline. So it's going to be very, very interesting to see what happens by Thursday evening.
Eddie, do you think traders have any idea as to what's coming up? Because the light volume, I think, would suggest that a lot of traders are simply waiting on the sideline in order to get more clarity in terms of what exactly is going to happen at the end of the week.
I think that's what smart money's doing. I think right now, if you're trying to do a short-term trade, I mean, you're just playing a very high game of risk because no one really knows what's going to happen right now. And I think if we do see the tariffs increase on Friday and you do see that substantial sell-off in the market, which would be expected, I think for a lot of the cash that's on the sideline and some investors who have not participated in the first 4 months of this year's rally, that would be a great opportunity if they have the right risk tolerance to start going back into the equity market. So the bad news could present a great buying opportunity for many.
And Eddie, switching gears here and talking about earnings season, 88% of the companies in the S&P 500 have already reported results, beating by about 6.7% so far. I mean, when you take a look at the numbers, this sure isn't shaping up to be the earnings season to forget that a lot of us, or a lot of investors, I should say, were bracing for.
I know. And see, here's the thing. We've been saying for quite a while now that we did not see the breakdown in fundamentals that so many people were predicting. People were predicting an earnings recession in the first quarter, and they were citing the fact that they thought maybe the tax cut boost that some companies got last year would start to die off in the first quarter. But we have a very strong consumer. Wages are going up. Spending is up. And these companies, we are not in an earnings recession. They are actually beating expectations. And that's why the first 4 months of this year was the best start that we've had in the markets for nearly 9 years.
Eddie, we have retail coming up. That's one sector that we haven't heard a lot of results from yet. We have Kohl's, Macy's, Gap, JCPenney's all on deck over the next week or two. Do you expect to see, I know you just noted the strong consumer, but do you expect that to be validated, I guess I should say, when we get some of these retailer numbers?
You know, that's going to be a tough call. I think you will see it. I'm not a big fan of the retailers because of the Amazon effect. But I think the bottom line that we will see in this summer season is I think we're going to see record spending and travel this summer because the consumer is strong, they're healthy, and most importantly, they're very confident and feel comfortable where they are. And with the wages going up and inflation staying tame, I think we're going to see spending really pick up in the second half of this year.
Eddie, when you take a look at the recent volatility that we have seen in the markets, I mean, as recently as this week, yesterday, we had that massive sell-off. When you see those types of events occur in the market, is that an opportunity to buy?
I believe it is an opportunity to buy, of course, for the right investor with the right risk tolerance. Because keep in mind, there are still a lot of people that do not believe in this market. And after the crash that we saw in the fourth quarter, there's a ton of cash on the sidelines right now. And so for those folks, they're going to be looking to try to play catch up. And I think that they're going to have these opportunities. They need to take advantage of it because the bottom line is the fundamentals for 2019 are strong. I believe they're going to stay strong. And I think we will be higher at the end of the year than where we are today.
Yeah, Eddie, taking a look, you predicted a double-digit gain for the S&P in 2019. That was back in late December. You made that call. When you take a look at how far we have come already, we might blow past your estimates.
We may very well, and I hope that we do. But I think one thing we do have to expect as investors is we will see some type of pullback this year. The trajectory is not going to be straight up. And that's why I think when you're in a secular bull market, like I've been saying for the last few years, those dips have proven to be great opportunities for investors as long as you're not over leveraged or taking way too much risk. Because, again, there's a lot of people that have not participated in this.
Eddie, what do you buy in the market right now? What looks attractive to you?
So I think right now the interesting thing yesterday is when you looked at the technology sector that got beat up, that's going to be something that's going to be a great opportunity on pullbacks because the China trade issue, if it does go the wrong way, I think technology is going to take a big hit, and that'll be a fantastic time to jump in. The other thing is, I still like financials. I mean, the financials have very good balance sheets. They're strong, they're healthy, and I think with the consumer strong, you'll see lending pick up. And with the 10-year note back down well under 3%, you should start to see mortgage rates tick up as well, too. I mean, mortgage lending pick up, which will help the banks.
Eddie Ghabour, Key Advisors Group, thanks so much for joining us today.
Thank you.